All right, good morning, everybody. Today is Wednesday, December 3rd, and market opens in about 2 minutes. So the market open direction today is for a sell, the intraday. Yesterday, you can see we got tapped out of the entry, and then price went straight to TP. So that has happened even the day before, got tapped out, and then price came back. But the previous two days were straight wins. So let's see if we can get a clean move on market open here. And given the size of this candle, I don't know. I don't know if we're going to push down first before pushing up. But anyway, let's see how this goes. Um, all right, market opens in about 1 minute. All right, let's see here. We have 15 seconds. 5 seconds. And market is now open. And then we will go for the market open scalp. I don't know if I entered too early. Okay. So this is the entry here. Then of course there's the market open scalp that we go for 1:3. All right, so let's see. 47. All right, so the market open scalp would have ended up losing. And again, like as I said earlier, this big candle at 9 p.m., it's a pretty bullish, I'm sorry, bearish candle. So probably some sort of retracement to the upside, but even this market open, intraday market open entry, I am not sure if it will survive this retracement. And also we are tapping into this bullish order blocks here. So in any case, I was hoping for buys today on US30, but you just have to follow what the system says. Yeah. So the intraday market open entry unfortunately got tapped as well. I think your study will continue being bullish. I was really hoping for a bullish entry today, but this entry ended up losing today. So we'll see. So when it comes to the SAR and EMA scalps, the only other possible entry is let's see. Probably this one, 602. This one as well on the daily. Let's see. 549, 559. Mm, nah. 560. Um, oh, wait. There's a EMA entry here. This market, honestly, I don't even think I want to do anything much. 536.5, 526.5, 526.5. If price gets here, we can take a buy. Um, but we just have back and forth on needs to two. All right. So for the 10-point threshold, I mean that, and then we wait for the 1:1 trade that we use for official trades. Um, if you see a green X, I'll be taking the 1:1 entry. The issue is this big candle, this 9 a.m. candle. Like I literally wanted buys for US30 today, but we just have that back and forth. And it looks like that the push back up closed that gap that was there, the fair value gap. So today might just be a back and forth day. But let's see if we can get this 1:1 entry. If we do get a green candle, and that's typically what we use for official trades. Uh, I'm still waiting. Okay, so there's the green X. Uh, let's see if this will push up. If not, so however this trade goes, that will be it for today. I have to drop off. I forgot I have something else to do. But let's see if this trade hits. It's probably going to be the only one for today. There you go. So full TP on that trade. Um, Yesterday we had a win as well for that 1:1 trade. And I really don't want to stick to the 1:1 trade. So I'll probably be moving, or I will be moving the official trades to this market open entry, either this one or the scalp. So yesterday, the intraday market open entry got stopped out. Price went back up to where TP was supposed to be. Same thing the previous day. And then, of course, the previous 2 days were back-to-back wins. Actually, the previous 3 days, the previous day stopped out. And then, actually, no, previous day was a win as well. Market open straight to TP all the way at the top. Previous day. So, it's had this habit of hitting stop loss and then pushing back up towards profit. And that's expected a little bit due to the season that we're getting into. So we are pretty much towards the end of the year. So you expect some of this back and forths in the market. Now, something that I've been doing is if I do, so I just use the intraday market open. So let me show you an example here. If I do get the intraday market open, so I have my order blocks turned on, and then I wait for stop loss or take profit to hit. So if stop loss or take profit hits between, and I normally want that to happen within the first 30 minutes of market open, but I give it till like 11 a.m. So the morning trading session. So a good example is yesterday, right? So I want to see, give me a second. I want to see the candle that hits stop loss or take profit. The candle that hits stop loss or take profit, you ask yourself, did it reject or did it tap on any order block? So you see, like yesterday, this candle, uh, Where am I using? Let me see. Let me see. Let me just change this to the 15 minutes so that it moves fast. So this candle that hit stop loss, look at where it rejected from. It rejected off of this 15-minute bullish low. So what I've been doing is so long as the candle that so if the candle hits take profit, and it depends on what direction it's going, right? But in this instance yesterday was a buy. So the candle that hits stop loss rejected exactly at a 15-minute order block. So what I normally do, I take that and I go for a 1:3 risk to reward. I think that's why I have this, this marked up as post market open buy. So I go for 100-point stop loss and 300-point take profit. And so far, it's proven to be pretty profitable. And I think the same day it did the same. So that's just a little thing that I'm doing because I've noticed, if you notice with this, you see like how price is coming back down. Like for example, today, if there was this candle that hit stop loss here, if it had passed, if there was a bearish order block here, guess what I would have done? At the close of that candle, I would have entered a sell. Because if you notice, this intraday market open directions, we are typically not wrong like a lot, if that makes sense. So we are normally not too wrong with the direction. So sometimes you'll get stopped out and then you'll see that price is coming back in your direction. And here, if I show you guys, like for example, give me a second here. Um, Let me just do this. Um, if I show you, and I go like right for a 1:3 risk to reward, and a 1:3 risk to reward is pretty heavy on US30, especially. So you're doing 100 points take profit and 100 points stop loss. And also the alternative is true. If I hit take profit, I look at the candle that hit take profit. Did it reject off of any order block? If it did, then I enter in the reverse direction. So you'll see here, and I'm calling it a liquidity grab. So if we go to this journal that I've been tracking the liquidity grab, you'll see, and I started this 2 weeks ago. So you're not gonna get a trade every single day because I'm not every like for example today, the trade or the candle that hit stop loss did not reject off of any bearish order block or did not tap any bearish order block. In any case, it was tapping this bullish order blocks. So typically then, like for example today, I'm not going to take any reverse trade or any trade in the same direction. But you can see here, and I'm going for a 1:3 risk to reward. So you can see I started this November 21st and risking 1% per trade. So you can see November 24th, I started that on Friday. So you can see this is risking 1% per trade on a 200K account. So that's 6K there, 6,000 the next day. The day after that, yes, there was a trade, but it ended up as a losing trade. And then Mondays, same. Monday there were two trades. The reason there were two trades is because of the holidays. So during Thanksgiving, I took a trade during Thanksgiving, and then it had a market rollover. So one trade ended up losing, and the other one ended up winning. And yesterday there was that trade, but for some reason, I'm still in the trade from yesterday. And I think based off of the markup here, it did hit TP, but I think I was stuck on a little bit of slippage because my entry was at the close of this candle. And if we go to the markup here, it should have hit TP, but I think I had slippage on my entry. So technically, or not technically, well, I'm still running on this reversal trade from yesterday. And sometimes it takes a while for it to hit profit because you're going for 300 points take profit on US30. And the idea behind that is that, especially if your trade has already hit stop loss, price has gone against you already by 100 points. So even though it's like you're going for 300 points stop loss, I'm sorry, 300 points TP, um, you are likely to hit profit within either the same day or something. And typically, I like when I hit stop loss or take profit within the first 15 or 30 minutes of market open, because if you're entering that reverse trade, you want there to be liquidity in the market. So I had back tested, sometimes even entering just whenever stop loss or take profit hit, even after 11 a.m. But of course, we know that after 11 a.m. New York session, there's not a lot of volatility in the market. So you might just get, back and forth and stuck in that position. So, but typically um, e- you want that entry to come in within the first 30 minutes of market open. But again, the trigger is anytime take profit or stop loss hits, and I'll try to remember that on the live session. Anytime take profit or stop loss hits, we ask ourselves, with that candle where stop loss hit or take profit hit, was there any order block to push price back up or to go with the continuation? And if there is, then you just enter on the open of the next candle. But anyway, other than that, that will be it for today. Today has just been a back and forth day. And again, the thing that messed up today was this 9 a.m. candle. No, I want to change this. Was the 9 a.m. candle that was a big bearish candle. So there's just a lot of back and forth to be expected in today's market. So this candle right here messed up everything. But we'll see how the rest of the week goes. I think for this intraday market open entries, let's see. So for this week, Monday was a losing day, Tuesday was a losing day, Wednesday today is a losing day. Last week was pretty good. So Monday, and this is one of the trade setups that's guaranteed a trade every single day. So last week, Monday was the only losing day. Tuesday, Wednesday, Thursday, Friday were all winning days. So like last week, we're risking 1% per trade. That's on a 200K account, that's 14K. Unfortunately, today, this week so far, $6,000 loss or 3% loss. But the beauty about this is that we are going for multiple risk to reward. So we are going for a 1:2 risk to reward. So if you can see the previous weeks, other than the week before the last, we had one, two, three, four losing days and one winning day. Had a net losing week of 3%. The previous 2 weeks were 2% win and what is this? 4% win as well. So overall, so long as we keep that positive risk to reward, the strategy is normally profitable over the long term. But that will be it for today's live session. I will see you guys tomorrow.